And no, should I buy it at 29? Should I buy it at 27.75 or whatever? Who knows? And when all is said and done, it's not going to matter. The whole idea is that you're getting your capital out of the system and into something that cannot bankrupt. Because when this whole thing goes down, mark my words, the great taking is very real. And a lot of people, a huge amount of people, are going to be left with nothing. Because ultimately, gold and silver, they are real monies. And historically, you went to cash for safety. And if you've got a credit event happening, how safe are some of these sovereign debt securities going to be?
In today's news recap, silver price surge expected in 2025 as UBS predicts $38 target amid industrial strength. UBS anticipates silver prices climbing to $36 to $38 per ounce by 2025, driven by falling U.S. yields, robust industrial recovery, and stronger demand. Despite recent headwinds, the metal's dual role as precious and industrial could fuel its growth. According to investing.com, silver prices are expected to increase in 2025, according to UBS, which is boosted by lower real rates in the United States and higher global industrial production. This is despite the fact that the metal is struggling to match the increases spurred by the central bank in gold. Silver prices increased by more than 20% in 2024, but they have recently lost impetus as a result of increasing yields in the United States, a strong dollar, and growth concerns in global markets. With speculative short positions expanding and ETF holdings stabilizing following major outflows earlier this year, the metal is trading near its 200-day moving average. This represents a positive development for the market. In spite of these difficulties, UBS continues to retain its positive stance with a target price range of $36 to $38 per ounce for the year 2025. Although rising yields have been a disadvantage, a decrease in yields might potentially improve the desirability of silver. There is a need for a shift towards cyclical commodities, which UBS anticipates will become more prevalent as the year 2025 progresses. Dual roles of silver highlight its market potential. Despite the fact that silver's association with gold continues to be high, the fact that it also moves in tandem with industrial metals highlights the fact that it serves a dual purpose as both a precious metal and an industrial metal. Now we'll show you the best clips of the latest interview where Holter talks about his price predictions, but first, smash that subscribe button and check our pinned comment for some massive offers on NordVPN. If you're a serious stacker, this is a perfect fit for you. For less than the cost of a Financial Times paper, you can protect your online activity from prying eyes with the most reliable VPN on the market. Trust me, the only thing you'll regret is not getting it 6 months ago. Enjoy the episode.
And no, should I buy it at 29? Should I buy it at 27.75 or whatever? Who knows? And when all is said and done, it's not going to matter. The whole idea is that you're getting your capital out of the system and into something that cannot bankrupt. Because when this whole thing goes down, mark my words, the great taking is very real. And a lot of people, a huge amount of people, are going to be left with nothing. I've seen it all going back to, I was a broker during the 87 crash. So, I watched the reflations, I watched the credit bubbles, I watched the credit bubbles blow up. And we are in a global credit bubble not ever seen in the history of man. And I would just tell you that all credit bubbles blow up throughout history. I mean, you can go back hundreds of years, and every credit bubble ever has blown up. And that's where we're headed. I do want to mention as long as we're talking about the stock market, you just mentioned Warren Buffett. Warren Buffett, I mean, I can remember back in 1998, 99, people were saying, Warren Buffett's washed up because he wasn't buying the dot-coms. He was raising cash. He had a huge amount of cash going into 2000, 2001. Of course, the market cracked. Same thing happened again in 2007, 2008. He was raising cash, and he now, I think the number's 145 billion in cash is what he's sitting on. And that is the largest amount of cash outright, and the largest amount as a percentage that Berkshire has ever held. So the reasoning behind him raising cash, and I mean, he says this himself, is that he can't find anything of value or of good value to purchase. So cash is a better place to sit. Now, I do believe that when this does go down, Warren Buffett is going to find out that he's sitting on the wrong type of cash, because ultimately gold and silver, they are real monies. And historically, you went to cash for safety. And if you've got a credit event happening, how safe are some of these sovereign debt securities going to be? I think we're going to find out that, not everything's AAA rated, not everything's safe. And we're going to find a bunch of sovereigns that get discounted and downgraded, maybe even completely collapse.
In today's news recap, gold in holding pattern as markets await U.S. data. Gold prices slipped in thin trade on Monday as markets awaited next week's U.S. economic data and the potential impact of President-elect Donald Trump's return to office on the Federal Reserve's 2025 outlook. Spot gold was down today to $2,618.99 per ounce. Quiet day with lower liquidity across all asset classes, likely due to the holiday season. UBS analyst Giovanni Staunovo said, adding that market participants will track upcoming U.S. economic data to see if the economy is slowing, which would allow the Fed to keep cutting interest rates. Fed Chair Jerome Powell said earlier this month that U.S. central bank officials are going to be cautious about further cuts after a quarter-point rate reduction in December, in line with expectations. For insights into the health of the world's economy, traders await next week's U.S. job openings data, the employment report, the FOMC meeting minutes, and the U.S. employment report. We still see the same factors in place which supported gold in 2024, ongoing central bank purchases with a desire to diversify their reserves and ongoing U.S. rate cuts supporting investment demand. Stanovo said, gold has gained around 27% so far this year. It hit an all-time high of $2,790.15 on October 31st. Markets expect significant U.S. policy shifts in 2025, including potential tariffs, deregulation, and tax changes after Trump returns to the White House in January. Now we'll show you more clips of the latest interview, but first smash the subscribe button and check our pinned comment for some massive offers on NordVPN. If you're a serious stacker, this is a perfect fit for you. For less than $4 per month, you can protect your online activity from prying eyes with the most reliable VPN on the market. And believe me, the only thing you'll regret is that you didn't get it 6 months ago. Let's get back into the episode.
Little guy, I mean, I think all of us have noticed that, we got more sales this year than probably the previous 3, 4, maybe even 5 years combined. I believe that is not a function of, if you want to call it financial markets. I believe that's a function of the real economy. The real economy, because of inflation, because of joblessness that's not reported, people are needing to fall back on their savings. And we as as, gold, silver people, we've seen these people buy over the years. We didn't see them sell because the real economy was not as crappy as it is right now. The real economy worldwide is slowing down. Now, I've talked about this probably 10 times in the last 3 or 4 months. But if you took, I use just the US, but it should be looked at it worldwide. If you took the deficit spending that the US has done just over the last 5 years, $15 trillion of accumulated deficits. If we didn't have those deficits, that money, that 15 trillion, would not have been part of the real economy. It would not have been part of GDP. And we would have been reporting, instead of 1.5, 2.5, 3% growth, we would have been reporting 3, 4, 5, 7% decline. And that's the case worldwide. The deficit spending, the use of credit, is masking the fact that GDP is no longer getting a boost by a multiple out of every dollar that's borrowed. It's actually getting a boost of less than 1-to-1 for those deficits that have been borrowed. So there's your math right there. I mean, we've hit debt saturation. Absolutely, you've got China trying to buy directly from miners. And that's a huge deal, because that means there's going to be less metal that'll make it to refiners, and thus less metal available for LBMA and for COMEX. One other thing is that, very interesting, back in, I think it was October, Russia announced that they were going to be purchasing other commodities, and the first one they named was silver. And I mean, the supply and demand is on a knife's edge, so you get, additional demand is going to blow up the supply. From a short-term, technical standpoint, we're oversold again. I mean, we've seen multiple times this past year where the metals bottomed. I posted, and I think, Andy, you posted my charts also, showing the bottom hooks. And I think what that illustrates is exactly what Andy was talking about: central banks stepping up and creating demand for gold. Not so much silver directly, but silver's going to move with gold. So I think that is definitely significant. And I really don't think it's important, if you're wanting.
What do you think of today's show? Do you agree with his outlook? Are we heading toward a financial meltdown, or do you think the system will hold steady? We'd love to hear your honest opinion. Post your thoughts and price predictions for gold and silver in the comments section below. Have a great New Year's Eve, and check this video right here because it's tailor-made for you. I'll see you on the other side.